So how does infinite banking play a part in our daily lives? We buy cars, we do rentals on our home, pay for vacations, we save for investments. So an important question is, how would you like to pay for it? And are we going to pay cash or borrow? Well, let's find out. You have $30,000 in an account that is earning 5% every year, which, by the way, is a reasonable return inside a properly structured IBC policy. So there's the interest it could earn each year at 5%, and you can see it growing. So the interest after 5 years plus that principal is 38,501. Most people understand compound interest. Einstein is credited with calling it the eighth wonder of the world. So we say, don't interrupt the eighth wonder of the world. Because if I take that 30,000 and I spend it, what would it cost me? It wouldn't just cost me 30,000. It would cost me 30,000 plus the interest I could have earned had I not drained the account. So it would cost me 38,501. When people think when they pay cash, it will save them money, you hear that all the time. So before COVID, I was in chapters for a book signing for my recent book that was mentioned, Think Like a Banker. And the subtitle of it says, and flip debt on its head. And a woman came up to me and said, well, I have no debt. And what you're recommending is that I borrow money when I'm buying something. Why would I do that if I can pay cash? Well, perfect question for today's lesson. So let's find out. Let's say that you wanted to buy a depreciating asset like a car or pay for a wedding, and you borrowed $30,000 at the same interest rate at 5%, just to keep it simple. What would it cost you? Would it cost you more or less? So on an amortizing payment, you can see that it would cost you $566 per month. And there's the interest that you would have to pay each year. And you can see that it adds up to $39.68. And so even though this is the same interest rate at 5% as the above example, it costs you far less to borrow, over $4,500 less. So would you ever worry about paying $39.68 when you can more than double your money by keeping it compounding? We get hung up on interest cost instead of possible interest lost. By paying cash, this woman would have sacrificed $8,500 to save $3,900 of interest cost. As Mike just explained, it's better to take a loan against your money and allow your money to continue compounding. Our clients are always amazed when they first see this, but the light bulb goes on for them. It's the same interest rate, yet compound interest, as you can see, absolutely crushes amortizing interest. Why? Because the compounding effect, earning interest on interest on interest, is greater than the amortizing effect since the balance here is declining. So buying a depreciating asset like a car, for instance, depending on how you do it, can actually make you money. And there's a saying that I like: if what you thought to be true turned out not to be true, when would you want to know? Many people think that paying cash is better when in truth, it's not. Okay, what if we increased the lending rate here from 5% to 7%? Well, that's 2% higher. Obviously, it would cost you more than what you were earning, right? Well, let's see. No, it costs you $56.42. That's still $2,800 less than the compound interest at 5% earns you. So does it matter if the borrowing rate is higher than the compounding rate? If we extend this 30,000, not over a 5-year period, but let's say over a 45-year period, which is our normal working years, let's say, what does that add up to? Okay, there's 45 years. 30,000 over that period is 283,000. This is the true cost of 30,000 over 45 years. And who understands this most? Our clients. And once they see it, they cannot unsee it. And they realize this is extra money that they would have lost for their retirement. When you pay cash, you give up total control of your money. So use OPM, just like the ultra wealthy, and turn expenses into assets. We believe there's more opportunity to serve our clients by helping them avoid the losses than by picking the winners. So what would it cost to borrow at 7% over the same 45-year period? Well, less than $69,000. You're ahead by about $15,000. So for the price of just $69,000, you could generate $283,000. And by the way, with real estate, you can write off the $69,000 interest cost. And this is only on one $30,000 transaction. What if it was higher? Let's throw in $100,000. Well, you can see it just goes crazy here. For less than $250,000, you could generate nearly $1 million. So how does infinite banking apply to your real estate business? If you're in real estate and you're saving for a down payment, the bank will probably tell you to use the equity in your home or use hard cash. But we say, why not save for your down payment inside an infinite banking policy and become your own banker and borrow against it? And you never have to give up the eighth wonder of the world, for starters, and it serves as an operating account when you need cash to handle rents and vacancies or for repairs and maintenance costs. So how would you like to pay for it? Using hard cash, draining your account costs you money. You can see clearly it's better to borrow and never cut down the apple tree. And by borrowing against your own cash value, you always keep control of your money. So infinite banking solves a universal problem we all face that only benefits the banks. And as Scott explained the problem, we finance everything we buy. When we borrow, we pay interest to someone else. When we pay cash, we give up the interest that we could have earned had we kept our money invested. Infinite banking answers this problem. So either you are a customer of the bank or you learn to become your own bank. And better than anyone else, our clients understand the benefits of becoming their own banker and working with us. And of course, we would like to invite you to do the same. So if we can use infinite banking and make money on depreciating purchases like cars, how much better would it be if you used infinite banking for an investment that appreciates over time, like your real estate purchases?
IBCanada Group, your independent authority for information on the infinite banking concept.